guys, it's Shannon and Jahnavi here, and we are here to talk to you about adjusting entries. So that sounds really complicated, but don't worry, it's not. So we adjust entries after we prepare the unadjusted trial balance. You see, that's step number 4, and so what we're going to teach you to do now is step number 5 in the accounting cycle.
So, what is an adjusting entry? And why do we need them? Well, have you ever used up a piece of paper? That's part of your supplies, right? Well, whenever you journalize supplies, you only journalize when you get more, but you never journalize when you use up your supplies. So, for example, let's say you had $1,000 in your supplies. To do a journal entry for that, let's say you used up $800 worth of your supplies by December 31st. So you would make a supplies expense account and you would debit $800 because it's an expense account. And you would credit your supplies by $800 because you used them up, so it is decreasing. This is how the final ledger accounts for supplies and supplies expense looks. Thus, we need to make adjusting entries in order to update balances of the accounts we have not kept up to date.
All right, so let's move on to prepaid expenses. You also need adjusting entries to do this. So a prepaid expense is really an asset because you already paid for it in advance. So let's take insurance, for example, okay? So a company has to be insured. It's just like a life or a car or a house. You pay insurance so you'll be protected and reimbursed for your expenses in case anything happens, like, for example, a robbery. Not everyone's going to buy insurance on January 1st. At the end of the fiscal period, let's say December 31st, some of the insurance is used up and some is still effective. To keep our books accurate, the balance in the prepaid insurance account must reflect this. To do this, we have to calculate how much we used up and charge that to the insurance expense account. Let's look at a journal entry for prepaid insurance. So basically this one is showing when you actually bought the prepaid insurance. So since prepaid insurance is an asset account, it's going to be debited, and bank would be credited since you used money from the bank to pay for it and bank went down. So the ledger accounts for this would be prepaid insurance credited $2,400, prepaid insurance debited $2,400, and bank credited $2,400, and insurance expense is 0 for now. So a journal entry. So this is when you have your insurance expense. So remember we had $2,400 worth of prepaid insurance. So basically they're 12 months in a year. So what we have to do to get how much insurance expense we want is we have to divide the initial cost by 12. Afterwards, we count the number of months that we actually used up. So in this case, we used up 6 months. So we multiply the number that per month, we multiply the insurance expense per month by the number of months, and that will give us $1,600. So that means that we have $800 worth of prepaid insurance left.
Now let's move on to late invoices. Now imagine that a company has purchased something and received the invoice after the fiscal period ended. Say that something was purchased at the Boxing Day sale and the invoice didn't come until January 5th. We always have to properly represent the net income. Accountants have lives too, so financial statements are usually not prepared until 2 to 3 weeks after the fiscal period ends. Basically, they just take the purchase invoice and make an adjusting entry in the old books. And this is because of the matching principle. We have to stay true to the matching principle when it comes to a case like this. The matching principle basically states that we must match our expenses to our revenues that helped us create this revenue. You have to do this because you might understate your expenses or overstate your expenses, and both ways are bad. This could lead to investors getting the wrong information and not investing in your company. Or you can get audited. They would write December 31st for the date and credit and debit the corresponding entries. So let's say you used an advertising service and you bought some utilities and on Boxing Day. So since they are expense accounts, you would debit the amounts 300 and 250, and then for accounts payable you would just add both of those amounts up and credit it since you have to owe someone.
All right, so we're almost done, don't worry. So this is the adjustment columns. So do you guys remember the 6-column worksheet? Well, we're adding 2 more columns. Don't worry, it's not as hard as it looks. Before we journalize, we have to complete the 8-column worksheet to ensure that there are no errors. So here's how we work it. Now you see after the trial balance, there are these 2 columns that have adjustments under it, so that's what we're working with right now. All right, so say so back here, let's go back here. So you see supplies here, right? We have $1,480.90 worth of supplies. And then we're going to use up $954.90 over the year. So we have to debit that because we used it up and it becomes an expense, and we have to credit our supplies because we don't have that many supplies anymore. So now we determine that we only have $526 worth of supplies on hand. So what we're going to do is we're going to go to the 8-column worksheet and we're going to credit how much of the supplies we have used. So that means we credit in the adjustment columns in the supplies row. And we credit $954.90 since we used up that much. All right. So, and then say we also have an insurance expense. So let's look at this. How much prepaid insurance do we have? We have $6,564 worth of prepaid insurance. So basically what happens is we used up $2,494 worth of insurance, so we have to debit that, and we have to credit the prepaid insurance because, well, basically it was an asset and it went down. So we determined that the remaining value for insurance is $4,070. So let's go back to the adjustment column, and then we have to adjust how much we used up in prepaid insurance. Moving on. That's basically what we do right now, and then I'll just show you this part. So we have late invoices, and basically we just add, as Shannon said before, we just have to add up all of our accounts and debit them as expenses, and in accounts payable you have to credit them since you owe people that money. And then you have to write those in the expenses that we used up. So for miscellaneous expense, you would debit $85 since it's an expense. For telephone expense, $45, and for truck, $496. All right, so let's look at this 8-column worksheet again. So you realize that we have the prepaid insurance and we have the supplies and we credited them, right? So we also credited our accounts payable, but that one's taken care of with the expenses. But how are we going to balance out the supplies and prepaid insurance? Well, basically what we have to do is we have to create a supplies expense account as shown at the bottom and an insurance expense account, and we have to debit those because those are expenses. So let's go on to the next one. What we have to do is we have to add up everything, and we have to make sure that both the debit and the credit side of the adjustment columns are equal. So then we have to move everything to its respective place. So all the expenses and the revenue have to be moved into the income statement. And see, when they're being moved, they get adjusted. Like say debit and credit, like take miscellaneous expense for example. The debit and the debit of both the trial balance and adjustments were added up, and then that gave us $2,036.65. So basically you just add them up and things have to be transferred to the balance sheet as well. So for supplies, how you would adjust them is you take the debit, which is $1,480.90, and then you take the credit, which is $954.90. You subtract the credit from the debit to give you how much you have left, which is $526. And you do the same for prepaid. And then after you fill in everything, you are now going to complete the columns at the bottom. So what you do first, let's do the income statement first. First, you have to add up everything in both columns and then write it down. So what we have in the debit column of the income statement is $146,984.90, and in the credit column we have $213,821. Now what this tells us is that we have net income because the credit column, which represents revenue, is larger than the debit column, which represents expenses. So we're going to find the difference of both and we're going to write it under the debit column, and then we're going to find the total of both. We have to make them equal. So then let's move over to the balance sheet. So what happens is we have to add up everything again, all the debit column and the credit column. So in the debit column, we have $125,107.50, and in the credit column, we have $58,271 and 42 cents. So what we have to do now is we have to figure out the difference, and we write it under the column that's smaller, which is the credit column. And that number has to be equal to the number that you got, to the net income that you got from the income statement. So it is, and it's $66,836.09, and that is our net income. And then you add everything up in those two columns, and you get $125,107 and 50 cents. So that's basically how you work the a column worksheet. So this is what the journals would look like for the adjusting entries. You have the expense, which are debited, and you have the asset accounts, which are credited, except for accounts payable, since that's just accounts payable and it always has to be credited. Basically, that's all we have to say right now, and we want you guys to ask us any questions that you have.
We hope we have expanded your knowledge. See you tomorrow.